Well, hello, Maverick traders. Welcome to the Market Roundup. Joe with you here. It's Wednesday, the 8th of January. You know the drill. Let's jump straight into it. I'm going to break down the meaningful news of the day. Let's take a look at some stuff technically, and I've got some trades, so let's go ahead and share them.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you can see we had a little bit of a hesitation based on what we've seen over the last little bit. We've been kind of bearish, actually, towards the end of 2024, and so far, it's kind of been up and down. A little bit of speculation out there. Real quick, let's get into the daily news. So it's a flat day in the markets as the January effect continues. I'm going to get into this a little bit. The January effect is basically speculative profit taking, positioning, things like of that nature. It's very difficult to kind of gauge when it comes to the overall sector performance, because you'll see sectors that are good for the week or bad for the week or good for the day, so on and so forth. But you're going to find some really good bearish setups right next to some really good bullish setups. So it can be difficult to gauge for the longer term until things I refer to it as play out. It's going to take a few weeks, but eventually you're going to see one of the sectors move higher. And Rob mentioned this yesterday, as I'm seeing a little bit more strength in the energy and some of the pullback in some of those higher tech flyers. In fact, take a look at this real quick since I have your attention. Here's our one-day performance in kind of the sector breakdown when it comes to FinViz versus the week performance. And you could see, let's go down the week here. Energy, healthcare, communication services were the strongest. That was, 7 trading days ago. But then if you take a look at today's performance, look at the bottom. Communication services is the worst. Energy is the third worst. So these things kind of push and pull and jump all over the place. So it's hard to see consistency in any sector when you get some of this posturing, what I refer to as the January effect. So keep that in mind. So how do we finish? Well, the Dow was flat, up 0.25%, S&P flat, Q's flat, pretty much a flat day. We'll get in the chart here in a second. The Russell up a little bit. Oil and gold kind of push-pull based on some of the reactions they've had. Oversold, a bounce and some sort of bounce off of bottoms, things like that. So not a lot to really go off of. Let's go to the advanced decline line here. 56 declining, 40% advancing, and then above below the 50-day moving average, 71% below, 29% above. Now overall, folks, as we jump straight into the chart, it is definitely kind of half glass empty. I'm seeing profit taking, and think about this. A lot of times when we see the January effect happen, it is that. I mean, we've had a super strong move to the end of the year. Geez, we've had a super strong move period for the year. So, hey, a little bit of profit taking as we go into the holiday season. And here we are, the beginning of January. I think that's the second. Opens, goes down, then we gapped all the way back up to this area. Big candle down yesterday. Rob made mention of this, expecting a support level here, which it has absolutely. It almost touched that today. At least the S&P did. Now, I would expect this to kind of consolidate and meander. My 2 cents on this, folks, is we kind of play this game for a little while. It's going to take something very bearish or something kind of pessimistic to get these markets to kind of fall apart. We did get some economic numbers today. Unemployment is looking strong. Claims are great. Now, ADP employment numbers were a little lighter than expected, but we're an economy that's employed and still spending money. So until I see something economically that can actually justify a break below this level, I've got to play this thing, kind of sideways and just be realistic on the kind of the push and pull we're seeing when it comes to the January effect. Moving over to the Qs, folks, you're going to see the exact same thing. Let me get more of a line here. So a little bit of a descending area there, but we do have consolidation. We've got a good point where it bounced off of the rising 50-day moving average. Keep in mind, folks, this is still in a very comfortable uptrend. It's at the lower part of it, but until I see something that's going to be sustainable when it comes to weakness or bearishness, I can't really jump ship, right? So think about like NVIDIA. NVIDIA had great news. They came out, they said they're doing good, everything's great, and they get a little bit of a pullback, right? Things start to fall apart. It's just profit taking. On the same time, you're going to see some things that were on the bottom, they'll move higher. So overall, folks, I really can't make heads or tails on an emerging sector or a falling sector. Let's take a look at our heat map, and you can see got that nice little brown here. So Amazon flat, Apple flat, Nvidia down slightly after a big push to the downside. It's kind of halted. And Johnson, which is actually on my bear list, is starting to roll over and break down. Now, healthcare has been weak overall, but folks, keep in mind that healthcare for today was the second strongest performing sector. So it doesn't mean that Johnson & Johnson's going to go up. It's just super selective. I'm finding bears and bulls in every sector. It just depends on kind of the chart you find. It makes it a little bit difficult to do anything longer than a week or so, right? And this will eventually play itself out. It always does. At the beginning of each year, this kind of happens. So here's my outlook, right? We got below the 20, below the 50. We got the rolling over to 20, 50, 50 slope. The 50's flattening, that 20's starting to drop, but that massive support level to me is really keeping me reluctant to going full bear, and I'm not going to go bear until I see things start to roll over. It does look ominous, but that support level is super strong. I imagine this plays itself out for the next week or so, but I'm going to just stay, cautious, right? So I'm keeping that to negative 0.5. 0 to negative 1's fine. The monthly outlook is a negative 1. Now, if this rolls over, and I'm going to echo what Rob said yesterday, if we see a support level broken with some sustainability, like some sort of event or some sort of a move to where we see people jump ship, and we'll keep an eye on the VIX, then yes, I can easily go to a negative 2. But right now, it's just kind of meandering, and I imagine this stays boring for quite some time until we can get some sort of stimulant either up or down. So what do I got? It's more of the same. Here's EQT, RRC. We talked about these yesterday, the day before. I don't have too much on the neutral side. Things that are range bound are usually pushing a little bit higher with purchasing and speculation of growth, or hey, let's take some profits. So they don't stay there for very long. I know it's kind of strange because the volatility seems light, but most of the stocks that I'm seeing are either going up or down. So I'm going to stay away from neutral for now. On the bear side, Nike, Dow, Johnson & Johnson, MO, I mean, we've got kind of the same in the sectors that are quote-unquote underperforming. It's not so much the sector, folks, as it is the continuation of the stock. So I want you to kind of focus that. If you see a stock that's been going down for a while or going up for a while, pay attention to it. Let's move into RRC, a nice ascending triangle pattern. This is kind of what I'm talking about. You know, a move towards the upside towards the end of the year. And then it didn't really pull back with the markets, and it's continuing higher. Things that are doing this tend to continue to do it. I'm not seeing any sort of gain or I should say advantage or disadvantage when it comes to the sector. It's literally the specific stock. So be leery of that. Let's go to the bear side. Going straight over to Nike, right? Doesn't mean that the consumer's fallen apart. It just means that Nike is. It had been falling apart all the way into the end of the year. This was already showing some weakness. After consolidation, it started to flip, and here we are just moving lower. So will it continue? I don't know where the targets are here. We could see an oversold bounce, right? We got resistance levels. But I guess the whole thing that I want you guys to take from today is weakness and strength continue to be strong and continue to be weak. And it is a little bit of a speculative move. I do think a little bit of profit taking going into January. Selling on good news, buying on bad news. We're going to see a little bit of that, but I think it plays itself out towards the end of this month. It really does. And then maybe we can focus a little bit more on some sector outperformance or underperformance. So for now, folks, just be aware of that. January usually brings profit taking and speculative buying. We are going into a transition politically, so you're going to get a lot of that. And it's really consistent. Most of the time you can measure it. If something's going up, it goes up for quite a bit. And if it's going down, it usually kind of gets beat down. So our focus should be on the overall market trend. I am still definitely kind of bearish when it comes to the S&P. They haven't broken any levels yet, but we've seen a pretty good slide towards that support level. So glass half empty. I'm not -3. I'm cautious. So if I'm going to make a trade, it's going to be kind of to the bear side, but not for super long. And I want to make sure that I'm doing something bearish and something that's sustainably bearish, meaning it's breaking support levels and it's falling apart. I don't want to bear up anything like Nvidia. I don't want to go bearish on Nvidia. You know, it's aggressive. It's moving down, but it's still in a massive uptrend. So just be aware of it. Be realistic. So our focus needs to be on the market trend versus sector performance for now. Until the speculation plays itself out, we're not going to get anything too consistent. Economic-wise, ADP employment was less than expected, 122 versus I think 139 expected added jobs, but then right after that, jobless claims were a lot lower. So we are employed. We're not adding jobs aggressively, but we're staying employed. It's still a strong economy. Fed speak and unemployment later on this week. Lots of Feds going on Thursday, and then we got the unemployment number on Friday. I don't know how big of an impact that's going to have. So January is going to kind of play itself out. There are earnings going on out there. There's a slew. I should have put some down, but just make sure you check the potential trades as you see fit. I would be a little bit shorter term, folks. I am easing my way into 2025. There is no reason for me to load up here. And I have time on my side. This is the first month in a 12-month year. I'm not going to make or break it here in the next few weeks. Be patient, be slow, be leery, be aware, and let's see what we can do moving forward. All right, guys, thanks for joining me, and we'll talk to you next time. Bye, everybody.